another session. I know you all are very worried as the market is sinking down, but always remember one inherent property or characteristic of the market is that market falls only to rise up again. And it has not happened once, twice, but every time in the history of the stock market. So after every big fall, there is always a very big rise. So there is nothing to worry about. In fact, this is the time to accumulate the shares belonging to businesses which are fundamentally very strong, and these momentary Ukraine and Russia war is going to bring the prices down to a certain level, and the buyers are going to jump in and buy start accumulating these equities, whether it's FIIs or DIIs. So eventually the prices of the share is going to increase. When it will happen, we don't know for certain. So when to start buying, we also don't know. So the best thing you can do is find out every good company, fundamentally good company, and find out the support of these critical support areas on a higher time frame like weekly or daily basis, and then buy in small quantities uh, to reach your full capital allocation. All right, say for example you have allocated 1 lakh rupees to buy any particular share. I would always suggest to diversify that into different shares belonging to different sectors. So let's say you are allocating 10% of your money. So, and that's 10,000 rupees. So you can buy in tranches, 4 different tranches, 25%, 25%, 25%, 25% with every fall. Now, what will it do is that since we don't know when the market is going to bounce up, so we are continuously buying. So at any point when the market shows a bounce up, we will not miss this chance. And moreover, when you are buying good quality equity, as the price falls down, there is nothing to worry. The prices are going to go up eventually. So this is the chart before you, is a chart for Nifty, and in this particular lesson I'll also be explaining you how to do a fundamental analysis of any particular equity. So this is a Nifty chart, and you see in yellow lines these are the support and resistances we have drawn. So since the market is falling, we are concerned about the support, not the resistance. And you see the critical support for Nifty, it has already breached the support, the previous support of 16,700, 16,650 to 750. It has broken down. Now the next support is around 15,420 around to 15,350. If it breaks down this level, then it will enter into a new territory. That is, it means it may go sideways or continue to fall till this level, that is 14,001, 14,000, around 14,200 or 14,180. And it's very difficult, I think, to break this level because there will always be a bounce up. All right, anyways, if we look at the historical analysis through technical analysis we do, and if I want to find out how much Nifty has fallen at different points in time, you see every big fall, if I take, see from here, from 19th October onwards, it fell down by around 11%. All right, and then it rose up by around the same margin. All right, now from its uh, last swing point, it has already fallen down by 15-14% around. So 15-14-20% fall is not considered to be the market crashing. The market is still not crashing unless the market falls by around 30% or so. So now if I take Bank Nifty, into consideration, then also you see the one support that was there at around 3,700, 37,300 is already been broken, and the next support lies at around 31,750 to, you can say, 31,600. So if it breaks this support, then it will enter into a new territory. So unless it breaks this and goes down further, there is a mild support here at this point as well. You can see, as you can see here. All right, it's a small support at around 30,400 or so. So if it breaks this, then we need to be worried about the fall further to the level of 26,700. This is a very important support for Bank Nifty. So unless that's broken, nothing to worry. So let's now go for fundamental analysis, how to pick up any particular stock. Now as far as trading is concerned, the market is very volatile. You can do trading, but keep it, don't use too much of a margin, and use a strict very small stop loss so that it doesn't erode your capital. And as long as you're trading, choose any particular stock. Fundamental analysis in this case doesn't matter. The stock should be volatile to give you the return. But I'm more of an investor rather than a trader. So if I have to choose any particular fundamental stock, what you need to go is to a website which is known as Screener, and you can register for free. So how to do a fundamental analysis? Let's take Asian Paint, one of my favorite shares, Asian Paints. All right. So you can see the market cap is given 2,59,718 crore. All right. And the high is 3590 and the low is 2343. Dividend yield and everything is given here. Book value is also given, and return on capital employed is 34.8%, return on equity is 37.3%. But this doesn't matter, because you have to see the historical performance of the stock. A stock which performs well in 1 or 2 or 3 years doesn't necessarily mean that it will perform better also in the long run. But if a stock has performed better over a period of 10 years, 15 years, then of course the company is solid, the management is solid, and the revenue will continue to flow in. All right. And there is always an inherent risk in the stock market, but you can minimize these risks by buying equities belonging to companies which have a very rock solid foundation. Remember one thing, that in the stock market, around 70, 75 or 80% of the market is is run by only around 20-25 companies. All right. So if you buy fundamentally good shares, no problem at all. Now you see quarterly results. I'm not interested in quarterly results. Let's look at the figure from 2010 onwards. You see the sale here you can see consistently is rising from 6,434 crore, and it has went up today to 27, up to till this point 27,860. It means sale is rising, and increasing sale points to the fact that the company is expanding, company is growing. If you look at operating profit margin, you see this is also consistently increasing over a period of time. Now in the past 3-4 years the increase is little bit slow, but if you look at the entire 10-year period, then you can see that it is pretty much growing at a very decent rate. Then net profit is very important, because at the end of the day your expenses is very high and your revenue is also very high. Nothing is left for the company to distribute as dividend to the shareholders and put back into the business for further expansion. But you see the net profit in this case from 2010, you see this is from March 2010 onwards, it is consistently increasing. You see from 836 crore, 843, 989 and so on so forth, and you see it has gone up to 3032 crore. All right. So earning per share you see consistently increasing. Dividend payout, the company is also paying quite a good amount of dividend. If you see the return on equity of last 10 years is 28%. That is pretty good. 5 years, past 5 years 26%, past 3 years 26%, last year 27%. CAGR, if you see last 10 years 24%, last 5 years 22%, last 3 years 25%, in last 1 year it has given 13%. So if you see compound profit growth, last 10 years 14%, and then last 3 years 15%, currently it's 10%. So you see here, then the asset quality is also increasing, the company is virtually debt free. Then other thing that you need to know is what is the cash flow to the company, because cash flow is a very important indicator of whether the company is able to finance its working capital requirement very easily or not. You see here cash flow, yes, he has been negative, but eventually if there is negative, then there could be many multiple reasons for it, good and bad reasons for it. But here you see here the cash flow is consistently increasing. And if you look at here, cash from operating activity is always increasing. It is only from investing activities that you see that they are in the negative zone. All right. It means as far as operation is concerned, it is increasing consistently. So it's a very solid company. And you see here further the debt Where is it gone? Yeah, the company is virtually debt free. Now, company is expected to give good quarter. Company has a good return on equity, track record of 3 years ROE. Company has been maintaining healthy dividend payout ratio, and the most important part is that it is debt free. So it has no obligation towards interest payment. Stock is trading as 20.7 times of its book value, no problem. The good companies, they continue to grow. The company has delivered poor sales growth 8.76% over the past 5 years. No problem, poor sales growth with regard to the previous performance. All right. And in the last 2 years, we have seen COVID incidences have happened. So that's not a concern. Last 10 years, 20 years, if you see that in the last 20 years, in the past 20 years, every 3 years, companies like Asian Paint have doubled up, the investors' capital or investors' wealth. Let's take another company into consideration, that is HDFC Bank. Right. Again, you see market cap is given here. ROC is 6.31%. High was 1725, low is 1297. Now, if you see the revenue growth, see revenue growth is consistently increasing. All right. Then let's come to expenses. Okay, no problem. Let's come to the profit part here. You see profit, net profit, that is, you see six say around 6300, then it fell down a little bit, then it from then onwards for 3 years, it for 2 years it increased, then it fell down a bit, and then since then it is consistently increasing. So you see, again, it's a very good thing. And if you see earning per share, it is also consistently rising over a period of time. So 1 year could be a bad, couple of years could be bad, but you have to see the overall picture. Just like for if a company is performing 1 or 2 years is good, you cannot ride on the back of that company that yes, in the next 20 years is also going to perform good. But if a company has performed consistently good over a period of 20 years, so 1 or 2 year of bad performance doesn't matter for it, right? The company will always find out ways to turn around. So you see uh, you see the revenue growth here, how well its revenue is growing. From 2000, in 2010 March, it was 16, for that particular year it was 16,200 crore around. And then consistently it has been increasing, and only basically you see at any point in time, is it decreasing? Let me figure it out. No, it's not at all decreasing. Revenue is consistently increasing. And if you look here, net profit, as I've already shown you here, you see the net profit, how it is increasing. So from, you see, in 2010 what was the net profit? 3000 crore, and you see what it is today is 36,000. Do you think this company is going to just go away, disappear due to Ukraine and Russia crisis? These crises do come. If can you and it will, every 5 6 7 8 years there will be some crisis, something that will bring the market down, but that is an opportunity for a long term investors. So can you imagine a person who has purchased the equity share in 2010, he will really be worried about it with a fall in its price? I'll show you in the chart in a while. And dividend payout is also really nice. You see, return on equity in last 10 years, it is 18%. Last 10 years CAGR is 18%, very nice. So even if it's growing at 15% in 15 years, even if you do an SIP of 5,000 every month and 18% CAGR return it's giving you, in 15 years it will give you more than 1 crore rupees. So 10 years sales growth is around 20%, compounded profit growth is 23%, which is very good. And yeah, that's pretty it. So cash flow, let's see it. Cash flow, yes, in 2011 it came down, 12 came down, but after that you see how after every small the cash flow became negative, but again it is increasing again. Cash from operating activity, if you see, look at here, since it's a banking company, so there could be some negative, it will be in the negative zone. But from financing activity, you see it is always making good cash flow. And you see, in between 2020 and 2000, even during March 2019, there was a COVID crisis, so there was a delay in the payment, and many a default, it happened many a times. But here you see how it has grown, it has made a comeback, how it has made a comeback. So it means it is going to grow significantly in the long run. And shareholding pattern, one more thing I forgot to tell you in the previous chart. You see promoters, you see promoters holding, no problem, it's little bit less, but doesn't matter, it's a professionally managed company. FIIs and DIIs, you see, they are also their holding is pretty much consistent over the past 10 years. All right, so it is even now you see here the in 2000 December 2021, the FIIs and you see DIIs, they are holding pretty much, it is so even public is kind of okay, no problem, they're holding it correctly, so nicely, so don't worry about it, the company is going to fly high. Now look at, let's, now this is screener, another is available, you see, that is for which you have to pay a subscription, that is ticker tape. In this case also you can find out a lot about the company and everything. Clear? Now let's go to the chart. Let's take some shares into consideration. Now HDFC Bank. If you look at HDFC Bank, now it's a daily chart, remember. So you see here, this is a pretty good support, was a pretty good support for HDFC Bank. And it is resisting to this support currently. It may go above this support if the market doesn't fall too much. So this is a pretty good support, and it is basically reacting to its support level only. So if it further falls down, so what I have done here, I have added some of the equity when it was in this particular zone, and I've used around 30% of my capital, around 30-35% of my capital allocated for this particular equity. And again, where will I add, if you ask me? Again, I'll add in the next support zone. So where is the next support zone? Let's figure it out. It is good support zone, it is over here around this point. This is a good support zone for HDFC Bank, again around 1150 rupees or so. And if it falls further down, then again this is a very important support around 927, but I don't think it will fall to that level. If you look at TCS, all right, if you look at TCS, this is a pretty good support for TCS. This is a pretty good support for TCS. Pretty good support zone for TCS, and it is hovering around its support zone only. So I had already added over here, it has fallen down further, so I'll not add anything more here. I will wait for it to fall down further, and I will place my order around this point. This is another support zone, that is around 3050 or so. All right, clear. Let's take a look at Pidilite Industries. So Pidilite Industry, all right, so this is a pretty good support zone, and it is around its support only. All right, I had made a purchase over around this point here, so around this support zone I had purchased, so it has gone down here. Where I will add next, I will add next around around this point, that is around 7, between, you can see here, between 720 and 660 I will add again. All right, till then I will not add. All right, if you look at Titan, so pretty well structured support, it is little above its critical support, so nothing to worry for now. So until it falls here, I will not add any more. Around 22, in the zone between 2280, or you can say 2290 to 2230 I will add. And furthermore, where will I add, because the next support is pretty low down here, around this point. Next I will add between the point around 1800 to 1780. All right, at this point I'll add Tata Motors. So So Tata Motor I had already marked the zone here around. If it falls down to this point, you can add up more. All right, I had added at this point here. It has fallen down from this point, so no problem. There is nothing to worry. It will go up eventually. You know where I had added in the initially, where I had added initially when there was a big COVID fall. My average price during that time was around 76 rupees. So it means, do you think I will be worried that Tata Motors will fall back to 76 rupees? No problem. It will not. And then my next addition happened around somewhere in this zone, and then it flew away. Right, so I don't need to worry about it, because even if it breaks this support, another very strong support is around 289, 266. So I don't think it will go down to that level, but if it goes, no problem at all. Tata is not going to stop manufacturing trucks, so it is going to rise up again further. Right, Relaxo Footwear, a new found company, very good company again. So again, the critical, very important support zone it is reacting to. So very important support zone around 1143, 1150 is a support zone. So if I've already added around this support, around this point, around 1180 or so. So my next addition, where it will happen, it will happen around this zone. Provided it falls to this zone, I don't think it will fall, but if it falls, I'll be very happy. It's a very solid company with solid commitment. It's going to increase many folds in the long run. So please, keep an eye on this company, right? So let's which other company, um, let's say Reliance Industry, you people's all-time favorite. So let me erase this what I've already previously drawn. So you see here again, it is hovering around its critical support. Most of the share is around its critical support. So you can purchase here, and next when you will purchase, next you will purchase around this zone, second tranche around 2000 zone, and the third purchase should happen around 1830 zone. These are the three zones. So it means, let's say if you have 1 lakh of capital, then you can purchase for 33 thousand around this point. If it falls down, no problem. If it goes up, you have not missed the chance. If it falls down, you can average here. If it falls down further, you can average here to get a better average, so you're not missing the chance. And then if it further falls, the question, if it further falls, no problem at all. Just sit down, you have exhausted your capital, it is going to rise. So there is nothing to panic about, nothing to panic about. So keep this in mind, because you see, we problem is with investor is that they panic for no reason. You see, nobody questioned when Reliance Industries gave a write up of 36% over a period of how many, over a period of around 3 years. 36%, just hold on, not 3 years, from 29 July 2001, sorry, 3 years, to 21st October 2021. So how long is it? July, August, September, July to July, and then August, September, October. So that will be 15 months. 15 months, 36% return is given. Nobody questions, sir, why it is rising. But when it starts to fall, everybody's question why it is falling. The share will not always go up, dear. People who have purchased, who are investors, who are FIIs, they will book profit. And once they start booking profit, there will be a selling pressure. But investors are always, and in fact, the same FIIs are again, they will buy back at the support zone. They will keep buying and selling, keep buying and selling, but there will always be, when the company makes profit, its share price is going to consistently increase and give more and more returns to the investors. So you don't need to worry about it. Reliance Industries will eventually reach 5000 level. When it will happen, don't know. Will it happen over a period of 10 years? Before that it will happen. Right. So even if it reaches 5000, that is, you're talking about 100% increase in the price. So, and I'm not including the dividend that you will get as cash flow. All right. So please do not panic. There is nothing to panic. When you keep asking about shares which don't have any fundamental, there is no reason for it for me to buy it, because there are no fundamentals of the company. I'm scared about that, because in that case, if the share prices is going to fall down, it will take several years to rise. But for these companies, they will always be in demand. They will always be in demand, and there will be always big investors will be sitting at the bottom to buy when the price reaches to their comfort zone. So the problem is with the retail investors, they buy high and sell low and they are booking profit. But the the institutional investors, they will always buy low and sell high. All right, in fact, I never sell when I buy, because I'm investing for a long term. My horizon is around 25-30 years. I will be making income from the dividend, so I will never sell good company share. I will take benefit from bonuses. All right, so an investor never loses money, so hold your horses. Even if it falls down, accumulate good quality of shares. I've already stated and shared with you which are these good quality of shares, and do not panic. I hope this helps. I'll come in the next video and we will cover how to do intraday trading, though I'm against intraday trading, because it will end up losing money. You cannot make money in a very short period of time in the stock market, but still many of you requests are intraday trading. So next video will be with regard to intraday trading. I hope this helps. Thank you. Bye bye and good night.